Students, welcome to the YouTube channel of Northeast Junior College. I am Anura Yasmin Lashkar, lecturer of Commerce Department. Today in this video, we will learn how journals are passed regarding issue of shares. Now, first of all, we should know what is issue of shares. Well, issue of shares to the public is a process through which the capital required for carrying the object of the company is raised. Now, this issue of shares can be in two cases, that is for cash and for consideration other than cash. Well, issue of shares for cash means collection of cash either in at a time, that is lump sum, or in installments against the issue of shares. And issue of shares for consideration other than cash means that the company has received some benefit in kind and shares have been issued against that benefit. Let's take an example to understand issue of shares for consideration other than cash. Assume that a company purchased some assets from a seller, and instead of making payment to the seller in cash, the company may allot shares in discharge of purchase consideration. Such issue of shares to the seller is known as shares for consideration other than cash. Now, when shares are issued for cash, then it may be of two forms, that is lump sum, or you can say that the total money received at a time or in installments. Now, we will learn both the cases along with their journal entries. Now, when full consideration is payable in cash on application, sometimes what happens, shares may be issued in lump sum on condition that the full consideration is payable in cash along with the application. In such a case, we will pass journal entries like this. For the receipt of application money, the journal will be bank account debit to share application and allotment account. You will debit bank with the amount received on application against application and allotment money. Now, if the company issue equity shares, then write equity at the prefix of the word shares. And if the company issues preference shares, then write preference at the prefix of the word shares. And if nothing is stated about the class of shares, then it should be taken as equity shares. In such a case, the word share will be prefixed by the word equity. That means here you will write equity. That is to equity share application and allotment account. Now, here in this journal, we have credited share application and allotment as because simply take it as asset, that is share applications and allotment as asset, and if asset decreases, then it is credited. Now, for allotment of shares, the journal will be share application and allotment account debit to share capital account. Now what happened? After receiving the amount, we will allot shares to the public. Now we will debit to share application and allotment account, as because just to cancel it and just to transfer the amount to the share capital account. That is the cash received which the company received transferred to the share capital account. Now after the journal, give a narration. You know, the narration is the brief description of your entry. So give narration. The next case is where full consideration is payable in cash by installment. This case, installment. Now sometimes the amount payable on a share is payable by installments. The number of installments may be 2 or 3 or 4 or 5. Now let's see the name of the various installments. If the amount is payable in 2 installments, then the first installment money is known as application money, and the second installment money is known as allotment money. Similarly, if the amount is payable in 3 installments, then the first installment money is known as application money, second installment money is known as allotment money, and the third installment money is known as first and final call money. Likewise, if the amount is payable in 4 installments, then treat first installment money as application money, second installment money as allotment money, third installment money as first call money, and fourth installment money as second and final call money. Likewise, if the company or if the amount is payable in 5 installments, or if the company take the amount from the shareholders in 5 installments, then the first installment money is known as application money, the second installment money is known as allotment money, the third installment money is known as first call money, and fourth installment money is known as second call money. Lastly, fifth installment money is known as the final call money. We will see the journal entries where full consideration is payable in cash by installments. So, first of all, for receipt of application money. When application money is received, bank account is debited and share application account is credited. Here, write equity at the prefix of the word share if it is an equity shares, and if it is an preference shares, then write here preference at the prefix of the word share, and if nothing is stated in equation, then write equity, treat it as an equity and write equity at the prefix of the word share. So here why the bank is debited? As because amount is received by the company and the amount so received is against share application money. That is why share application account is credited. Now, as application money is a part of share capital, so it is not directly credited to share capital account on its receipt. In fact, it is treated as deposit money and is credited to a separate account called share application account till the shares are allotted. And after shares are allotted, then shares capital account is credited. And this share application account, this one and this one will be cancelled, and bank and share capital will remain. So these two, first these two journal entries. After these two, then go for making allotment money due. Here what happened? The company calls for the shareholders to give their allotment money, that is due. Due means it is not paid till. So share allotment account will be debited and share capital account will be credited. Why share capital account is credited? As because it is a liability, and liability will, when liability decreases, then it is credited. So after the receipt of allotment money, bank is debited and share allotment account is credited. Why bank is debited? As because money is received against share allotment money. That is why bank is debited and share allotment money is credited. Similarly, after the allotment money received by the company go for the calls. Now the company makes call for the, if it is first call, then write here first call. If second call, then write second. If third, then third. Similarly, now for making the share call money due, share call account debit. Here if first call, then write here first call. If second, then second. And to share capital account credited. Share capital account will be credited like earlier one, and share call account is debited. Why debited? As because the company call the shareholders to give the amount due. Then after the receipt of share call money, bank account is debited and the share call money is credited, because the money so received by the bank is against share call money. That is why bank is debited and share call money is credited. So what we get from this, that when amount is received, then bank is debited, and when it is transferred to the share capital account, then we will give the reverse entry.